So the capital gains tax changes now affect inheritance tax? Wow! Check out this video as I explain why. Hi there, my name is Simon Misiewicz from Optimise Accountants, and in this video I'm going to be talking about the capital gains tax changes that has been recommended by the OTS, Office of Tax Simplification. I forgot my words. But they have recommended that they're going to make some capital gains tax changes, haven't they? However, we also need to now think about how that's going to affect IHT. Why should CGT affect IHT? Well, it does, and I'll explain why. So why should you watch this video? Well, the first thing is you might want to be doing some gift planning if you're looking to sell some assets and the CGT implications with regards to the new proposals, and legacy planning, making sure that you pass over assets to children without paying any IHT at all. Now, I have done a video which based on the current process of gifting assets using trusts. So make sure that you watch that really useful video. That's appearing above my head right now. There's also a link below this video to explain that in a bit more detail. We recorded a video on Monday which talked about, last Monday this is, about capital gains tax and how that replaced CGT is replaced by income tax. Do watch that video as I went through deep dive into the OTS's report just to highlight some sections that I think is very useful for you. So do check that out. Again, that link is above our head and below this video description. To be helpful, I've also provided you with a link to the OTS report, which is in the video description. So feel free to have a perusal of that. 135-page report. You should do that in a few hours, right? What's the purpose of this OTS report recommendation to the Chancellor, Rishi Sunak? Well, ultimately, it's about creating administration and technical issues and getting rid of those, and to create this thing called changing of behavior, which basically means equality. So one person should not receive an advantage from a tax position from another, which to you and me would be entrepreneurship, which is my whole big issue with regards to this report. It is talking about total equality. Entrepreneurship is not equality. Someone is a leader and someone is employed. That's just the facts. And people that say, well, I don't like that golf. Well, there are people that don't want to take risks, and that's fine. You want a good certainty that you're being paid every single month so you can enjoy your money with your family. And that's fine. People that just take risks are the ones that employ you. So there's got to be this divide. And yet, the government are stamping out this whole entrepreneurship, in my opinion, which is really odd because that doesn't seem to be the Conservative way in the past. So let's have a look at some allowances and rates now. So capital gains tax rates, first of all. So we've got the allowances of £12,300 and you've got £24,600 for a couple. So if you sell assets below these values, then you don't have to pay capital gains tax. Whoopee, happy days. You've got a basic rate tax band now if you sell an asset, and you pay 10% for non-residential property assets. And you've got, and when I say property assets, I'm talking about commercial properties, and property really is an American term, so I'll have to stop doing that. But property could be paintings as well, or other types of valuable assets. Now, there is an 18% capital gains tax rate for residential properties as well, so just be mindful of that. There are two different rates. As a high rate taxpayer, you pay 20% for non-residential property assets, which is obviously double the basic rate tax band. And then you have a 28% residential property CGT rate as well for high rate taxpayers, which is substantial in itself. Now, before I go any further, obviously the whole new world that we potentially be going into is a huge discussion point. So that is something I'm going to be doing live on our online community, which you can sign up today for free for 28 days and watch some of my videos, look at my templates to help you save tax whilst building your wealth, whatever it might be, in property, in business or other. So this platform is helping you to grow your portfolio of assets, of whatever that could be, and minimize your tax liability. And I'll be talking this Wednesday all about the CGT changes and how you might want to be proactive around that subject. $9.95 per month, not a great deal of money. A couple of coffees and at Starbucks or Costa, and away you go. So in this regard, the OTS report, which I provided you a link with, they talked about this IHT and CGT, and what they're saying, well, it doesn't really tie nicely. And there's a couple of reasons for that, which I'll go into later on. So there's clearly some changes with this flow chart here, and I'll let you pause this video so you can watch, just have a read of this. But basically what they're looking to do is say, well, we don't like the fact that someone has got an asset passing over to the children and they haven't paid any tax at all. How does that happen? Well, I'll explain in a little while. But that is what the OTS is saying we don't like. HMRC should collect taxes when you gift assets and when you die. When you die, you're in a grave and we'll still tax you. That's basically what they're saying. Now, as I mentioned, there is a video that talks about gifting assets with the current position whereby you don't have to pay capital gains tax or inheritance tax. So make sure you watch that video. Really crucial, because you might want to do that more now than ever before, because once these changes are enforced in some way, there is going to be more tax to pay. So you might want to do some gifting of assets, do some proper legacy planning for you and your family sooner rather than later. And I also mentioned about how the ways that you can minimize IHT as well. So why not take this opportunity with all this kerfuffle? We don't know what word that is, kerfuffle. So whilst we're going through this kerfuffle, you can have some proactive tax planning help to minimize IHT, so gift assets to your children. Now, I already explained the CGT rates. I'm not going to go into that again. But the IHT, what you need to think about is that there's a 40% tax band, irrespective if you're a basic rate taxpayer or a high rate taxpayer. So there's a huge variance if you're a basic rate taxpayer. So basic rate taxpayers, if you're gifting assets, you might pay less tax than if you die and you still have those assets in your estate. So is it time for you to give those assets over now to save the tax liability? Because let's be straight about this. If you've got a bunch of shares in your own name right now, if you gift them, well, you might only pay a 10% CGT rate. But if you wait till you die, you pay 40%, which is 30% more tax. That's a substantial amount of tax that you pay, especially if you think about it as being £1 million. Well, hold on, that's now £300,000 that you're giving over to HMRC unnecessarily. Now, one thing I would want to bring to your attention is this IHT lifetime allowance. So everyone, individual, has got this IHT lifetime allowance of $325,000, which doubles up if you're a couple to £650,000. You've also got this IHT home nil rate band, or residential nil rate band, you might see it as, where homes cost more than $325,000. So ultimately, you could have a IHT ban of £500,000 per person, which as a couple is $1 million. So you may not need to worry about inheritance tax at all unless your asset base is £1 million. Now, we know that certain assets, such as shares, paintings, property, all increase in value. So it might not cause you problems right now, but what about in 5 years' time? You might want to do some planning now before that happens. And your IHT lifetime allowance resets after 7 years. So if you gift assets now to loved ones, it may not be pulled back into the estate for IHT purposes once you live for 7 years or more. And what I want to do is just highlight that point, because you might want to say, well, actually, I'll gift some assets over to my loved ones now. You do have to worry about capital gains tax. So do bear in mind that if you gift assets such as property, paintings, shares, that kind of stuff, then there may be capital gains tax. So don't think about just gifting assets without thinking about capital gains tax as well. Which brings me to the point of, well, if capital gains tax changes to income tax, is it better to do that change now rather than wait until Rishi Sunak has increased the capital gains tax to 45% for additional rate taxpayers? Just a thought. Now, IHT clawback. So if you die within 7 years of making a gift, then the IHT tax charge on those gifts may well be 40% if you die within the first 3 years. Now it filters out, so all the way down, once you have gift that asset over to a loved one and you survive for 7 years, then all of a sudden you pay no IHT on that particular asset and it resets again. But you could make tranches of gifts throughout your life and pay less tax as you go through. Now, some people think, well, if I die before 7 years, do I pay the full amount of IHT? Well, no, that's not the case. You just pay these types of rates, as you can see on your screen now. So you do need to bear that in mind. I'm not sure why I've got this SA return. I think I'm just saying this for your tax return, just as a reminder. But the whole purpose of this is to show you that you do have to pay IHT, but it is a reduced amount. So gifting assets now, even if you think, well, I might not survive 7 years, well, gift it now anyway, because you will pay less IHT in the future. What I want to show you here is what happens when you make a gift. And this is the very thing that HMRC hate. Okay, so this is what they're trying to get out of. You've got a £100,000 asset, whatever it is, it doesn't matter what type of asset it is, albeit we are talking about 28% CGT, so we're talking here about property. We've got £100,000 there. IHT is zero, and the reason it's zero is because it's below £325,000 annual allowance, annual lifetime allowance. So therefore, you've got IHT of zero. CGT, well, you've made no gain on that particular property. You might have had it bought for £100,000. The property value has not increased, therefore there's no gain at all, which means there's 28%, no gift, no CGT. The HMRC don't like that. They're saying, well, hold on a minute, we want you to kind of pay some sort of tax. Now, there are ways of doing this even if the property price has increased by using things like trusts. And that's in the previous video that I showed you earlier. So do have a look at that. So even if the property value has increased and there would be capital gains tax, here's a great way of minimizing that CGT by using a trust. Go check out that video for more details. Now, this is all quite complex in terms of IHT planning and so on. Now, you can do a 30-minute tax call for something very basic. If it's more complex than, in terms of IHT and how you work out legacy planning, then we may not be able to help you, in all honesty, in 30 minutes. And we don't really offer that support. So you might want to speak to your accountant about that, or an estate planner from a solicitor. If it's a very quick, basic question, then feel free to use the code YouTube25. Book your 30-minute tax consultation with us and we'll do our best to help you. Our tax calls are less than £200 using that code YouTube25. All right, so now we're talking about income tax and what's going to happen in the future. Now, there is a potential whereby CGT, as you can see there, it's all crossed out. And that's because the OTS report is saying we're going to scrap CGT. This is a proposal. It is not going to be put in force without Rishi Sunak and the rest of the MPs to sign it off. However, saying that, if they do sign it off, then all of a sudden we are going to lose CGT and we're going to be hit with income tax at 20%, 40% and 45%. Which if you're making gifts as an additional rate taxpayer, well, hold on a minute. 45% is more if you start to gift assets to your loved ones, then you're paying, potentially you can pay more tax than CGT at 45%, which is the new rate potentially, than you do if you die. So the question is, don't gift any assets. Potentially that's the way to look at it. Equally, if you're paying 40% tax, well, that's the same as IHT. So why gift your assets? Pointless. The only time really, if these changes come into fruition, is to gift assets, which is used when you're a 20% taxpayer. And as long as you don't go above £50,000 in total income, then you will remain a basic rate taxpayer, which is less than IHT. So in reality, what this is saying is, if you are going to be moved to a high rate taxpayer or additional rate taxpayer, making gifts is, well, I was going to use the word suicide, but you know what I mean. Now, if you want to understand right now what your capital gains tax liability is going to be, then why not download our capital gains tax calculator? There is a link above my head right now and below this video for you to download that calculator and identify ways in which you can reduce it before you make that disposal. Alright, so let's now look at the reality. This is whereby you make a gift, but you die within 3 years. Okay, so you make a gift, but unfortunately you pass away within 3 years. Now what's going to happen here is we're going to say that we paid the CGT upfront. Okay, so here we're going to say we're going to make this gift during the current regime, okay, not the proposed regime. So here we've got £50,000 worth of gain. We're ignoring CGT annual allowances for now, but we've got 28% capital gains tax liability, which now gives us £14,000 CGT, which we will have paid. IHT kicks in, so the value of the asset is £100,000. So even though you made a £50,000 gain, the actual value of the property is £100,000, which for 40% IHT would be £40,000 IHT. So even if you died within 3 years, it would still be clawed back, so you pay that £40,000. However, you do have this credit of £14,000, that's why it's in brackets there, to reduce your IHT liability, which means that your total net IHT is going to be £26,000. And that's why it's quite critical to think about legacy planning and making gifts during your lifetime to make sure that you don't have that nasty surprise in the future. But as I mentioned before, there are ways of mitigating that £26,000 altogether, and that tax loophole is exactly what HMRC wants to avoid. So now let's think about this. What they want to do, this is the HMRC's, the OTS's recommendation to Rishi Sunak to say, okay, what we're going to do is rebase the values at 2000 levels. So whatever gifts you're making, we will take a new value at the year 2000. Why year 2000, not 2016 or 2020? I don't know, but that's what they're coming up with. It's bizarre, but true. So currently we've got a sales price of £100,000, probate on value of £100,000, no gift, no nothing. So there's no problems with this, is there? Because you've got £100,000 sales value, and this is where you are selling the asset. So you've sold the asset of £100,000. You've got this from probate of £100,000. So you've been gifted through your estate, through your parents or loved ones. You've been given this asset valued at £100,000. You sell it for £100,000, no real gain, no CGT. Okay, that seems relatively straightforward, doesn't it? And that seems fair because, well, hold on, my parents have already paid, or they've been subject to IHT. They've paid all that, and now I've got this asset. I've given it away. I don't want property at all. I've made no gift. I didn't want to make profit, so why should I pay tax on it? Well, that's absolutely fine. However, what the OTS is suggesting is, well, yes, you've got that £100,000, but potentially your parents didn't pay IHT. So what we're going to say is instead is that the base cost for capital gains tax in the future will be decreased to the acquisition cost of your parents. Well, that could be huge amounts of implications right there. So the idea behind it is all of a sudden you've been given this £100,000 property over here, which is the probate value. You've sold it for £100,000 where you pay no capital gains tax in the current regime because there's no real gain, but they're going to rebase it to £50,000. Now, all of a sudden, this £50,000 capital gains is going to be taxed. Wow. And not just capital gains tax, is it? We are going to be moving potentially to an income tax bracket. So what happens? Wow, huge. So here's your £100,000. This is the market value you sold the property. It's rebased, in my view, incorrectly at £50,000. And now you've got a tax rate of £50,000 at 20% if you don't pay any tax at all. But actually, let's look at this number. £50,000 is in addition to your taxable income from employment, self-employment, dividends, interest, add all that together, plus this £50,000. Well, that moves you straight away to being a high rate taxpayer, potentially moves you to being an additional rate taxpayer, which is the 45% tax rate that I talked about in the front of this video, which if you've got £50,000, now you have to pay £22,500 tax when you sell this property. You didn't pay this before, But this is the recommendation that the OTS are making when you sell this asset that's been gifted to you on estate. Okay, so that's huge. So what can you do about it? Well, your parents could gift this asset now before all this changes happens, so you don't have this rebasing. They help themselves by lowering the IHT liability, and they help you as well not have this CGT. They could sell the property now and just say, do you know what, forget it, I'm not going to do any of this property investments anymore, and I'm just going to enjoy my life. Or indeed, they could leave the country. Don't forget that IHT will be based on the £325,000 on your asset base. But it is possible to move to America, for instance, or Hong Kong. So, the reason why I mention those countries is because in America, it's something like $12 million before you pay IHT. In Hong Kong, there is no IHT. So you might want to say, well, forget this country, let's leave. And that's the problem with the Conservative Party. They will now create a lot of people at the same level of income, and their tax reclaims and tax earnings will be squashed because people would simply leave the country. So please tell me if what your plans are in the future. Are you now thinking about gifting assets sooner rather than later? Do you think it's fair that these tax changes are coming in? Drop your comments in below this video. I'll be interested to see your views and concerns, and I'll also reply to them. Don't forget to like and subscribe to this channel so you're notified of every video that I release. Until next time, my name is Simon Misiewicz from Optimise Accountants. I'll see you again soon.